Hello guys, glad to have you on board again. Today we're going to talk about the cryptos first because I have a little bit of new information to share with you guys. I know it's a little bit, it's been a little while since I didn't give you new information to trade with it, simply because there was nothing to really talk about. I think now we got a price structure that is emerging out of this mess, and it tends to confirm what I previously thought, which means it's an ABC, ABC, probably ABC downside to come, an ABC, and just a triangle. So nothing more to just think about. We've been retracing 61%, which is a typical triangle structure. So I would just say let it go. Don't even overthink things. I would say as long as we don't break this low, you shouldn't be concerned about that. And normally we should consolidate two ways to the downside and head toward something in between this and this without breaking this. So you can put yourself an alert in here. As long as we don't make candle closes below this, normally there's nothing you should be concerned about. Where is that? I would say invalidation. There it is. So it would be ETH breaking triangle structure. Invalidating, it's not breaking, sorry. Invalidating triangle structure. So it's a possibility. Once again, we're speculating in a damn range, which means the hardest thing to ever do. I still suggest patience in here is the only option, and this is the only thing you should do. I strongly invite you not to trade this damn thing. But if you absolutely want to do, you may have seen that, what are we doing? We're trading this trend channel, okay? This lower channel. So it means that we're trading in the 1 hour context. It's definitely a 1 hour chart range, all right? We've been rejecting bullish in here and here, rejecting in here without reaching out the context, but therefore we're rejecting in here one more time. So for now, we're definitely trading that fucking range, and what's most probably going to come is something like that, then pull back to the trend channel, and normally we push twice in, just delete the goddamn prices. It's definitely going to help you a lot understanding what I want to see. Okay, what I'd like to see is the price making this 2 times. First time, okay, so either we do it a second time directly in context, which I don't think is normal, possible, but normally we have some kind of a pullback back to the trend channel in between. So I don't know what the hell's happening here. I don't even give a shit. What I care about is, are we going to push the trend channel one bite to the upside or a second bite to the downside? Either way, anytime we get to overcome this bullish context with 2 ways breaking through a trend channel, then that's what I would like to see to consider the triangle, at least this set of wave of the triangle, to be completed. A triangle is 2 sets of waves to the downside, 2 sets of waves to the upside, 2 sets of waves to the downside, and so on. It's simple. I mean, look at that. First impulse, second impulse. All right? I don't even see the goddamn prices. All right? Could have been 2 sets of waves to the downside in here. All right? It could have been possible. But as you can see, it isn't that like that, as we had something like that. So it's 1 and 2. So 2 sets of waves to the downside, or not even, what am I saying? Sorry, I'm saying anything. Nothing like that. God damn it. It's not there, you have the 2 impulses. It's more like that. It's 1, all right, and 2. But this one has been decomposed in 2 waves. It's simple as that. But it's in damn ABC. Okay, in order to get to this resistance, all right, in order to get to this rejection, to this boundary, so range boundary. Oh, actually this one happened to be in here, all right. You take the lowest, the highest, the next one is going to be probably coming out of 2 sets of waves. So as I said, we need at least a second impulse, and it probably is going to happen near or below the context, the support context. And it's going to be rejection, okay, what does that look like? You don't even see the prices, but you can still have the reliable information. What does that look like? It looks like a damn triangle. This wave needs to be completed, and so far I think this is where we currently are. we are waiting for further information, but heading toward a possible triangle. At least that's the structure that seems to be the most probable to me regarding the informations I have available so far. And obviously, either you do nothing and wait for this triangle to first confirm and then break out, or you just try to trade that triangle. I suggest you don't, because this is really dangerous to trade triangles, and the more the triangle gets obvious, the lower the reward will be. So this is definitely the kind of structure you should just wait and wait for the breakout, and hopefully the breakout to be in the direction you were hoping for. If it breaks by the downside, then it simply says we're not good. But does that mean the scenario isn't working? Absolutely not, because guess what? It can be many different ways. If you try to anticipate consolidation, and if you say, okay, Phil said it's a triangle, so if we build this triangle, and if we break it to the downside, then Phil is wrong, we'll have to sell that shit. Did I even simply say anything, any such thing? Never. We could have some pretty fucking complex structures of consolidation. Look at that. It's absolutely unable to read. So whoever's been trying to anticipate this correction just got it all wrong. Me included. But do I still made a bad trade back then? No, because I accepted a large level of indecision. I think in here you need to be as well. It's freaking damn hard to anticipate crypto consolidation at the end of this crash. The consolidations are more like a random noise for whoever is stupid enough to trade that on an intraday basis, which means not a lot of people. Right now, a lot of speculators just went out the game. Not enough volatility to play, so they're not playing anymore. And that's exactly what I wanted them to do, to get the fuck out. So that's a good sign. To me, everything I have in front of me just says, all right, we fucked them up. They're no longer playing, which means we have done the job. The long-term speculators or investors, call them however you want, just took it over. This definitely looks like what I wanted to see. Very low volatility, very dangerous prices for speculators. They're just not playing anymore. So sooner or later, it's just a matter of time, and time is a bitch. You cannot even try to think that you anticipate this. It can take 2 months, 3 months, 6 months, 2 years. God damn it, it can take up to 2 years. That's what I told you. So if you took that buy and hold, you need to be aware to handle this, what we have in front of us right now, for 2 years, and you should still be fine with your trade. Because someday it will reactivate for God knows what reason, and normally, if it does, you'll take a nice gain to simply reward the trade you've been taking, the risk you've been taking, and the patience you put it in that trade. That is absolutely necessary in that kind of scenario. So that was just kind of a reminder about what you need to do if you're trading cryptos. I sincerely think that there might be a speculative trade, but even that speculative trade will require a shit ton of patience. All right, and its only goal is to get to the upper area and certainly not heading for a freaking rocket mode or anything like that. All right, it's just something that will probably just double the price. You get in at 120, you get out at 250, and no more than that. All right, it's just a double trade with a very tiny amount of risk in that trade. You don't put more than 2, 3, 4% of your capital in there. Anything different is just stupid, and it's just like a random bet on the roulette. I mean, to me, it's kind of a 50-50. We could very well be invalidated in that trade, but I think at that point, invalidation should be really costing almost nothing, as you could get a double if it works fine. That's simple as that. So I very well like to do this instead of playing roulette. But would you put your entire capital playing on the black and white, on the red and black at the roulette? Definitely not. So don't play like that. I mean, if you've been putting more than 5% of your assets in there for the speculative trade, it's not going to work fine. I mean, this is not trading, this is gambling in that perspective. Anyway, so moving out of other asset classes and talking about the goddamn SPX. So, what to do with this shit? It's pretty damn hard to say. Yesterday, a trade I've been taking live with the users. I'm sorry, I would like to duplicate myself and do it both in French and English, but yesterday I had to do it in French and I couldn't do it in English. But we took that trade in real time, which I generally don't do because what it does, what it actually does when you do take real-time trades and making live trading session is that you just focus your attention into argumentations and things like that, and you just miss a lot of shit. Which means I would have been more efficient if I was trading on my own, but we still done a pretty good job. So the signal is daily. All right, the signal is daily and confirmed by a candle close. Let's have a look at that. That's the new element today. So it's a profit-taking structure, but with a divergent underlying structure, but still requires confirmation. We need to reverse this thing, which is still not yet done so far. So don't take that for granted. I just say we've got early signs that the bears are showing up, and at least we have bearish demand in the order books. I mean, most likely, I think right now, bulls are just asking out, and we'll see if bears are taking it over after the Fed. So definitely the Fed is going to be a game changer. If you think this is definitely a one battle, you're obviously wrong. I don't nearly think it is. The trade I've been taking yesterday is just half the position I wanted to put in the market because of the underlying volatility we had. Let's put that in context. Oh God, fucking damn it, this is not good. I wouldn't even like that. We're not supposed to have something like that in here. Remember that what that signal means? It means that we have a range, an upside potential range, a range that shifts normally prices to the upside. So don't be aggressive with that goddamn Fed, all right? If you are aggressive, you could have problems ahead because that kind of signal is not a good sign. It's just a 15-minute signal, as we do have a fucking daily bearish signal on top of that. So I would say definitely, I mean, those signal doesn't work every time. Like in here, we were supposed to be bearish, so we had that signal and we got the opposite side. So that doesn't mean we're obviously going to go there. It's just noting this because this odd, I wouldn't even imagine we'll have such thing. So anyway, yes, 15-minute signal back then. Let's put 5 minutes so you'll see even, yeah, it's even more clearly. So that's why yesterday intraday session, goddamn fucking noise, all right? Absolutely unable to read such thing. All right, so it's definitely the worst possible kind of structure, highest level of indecision. Obviously, it shows up that we've got a high level of indecision and tension facing the Fed's meeting. For now, the outcome seems to be bearish, which means we hesitated and we kind of anticipated the Fed, which means I don't know what is going to be said. I don't know how the market will take that. All I can tell is that for now, odds are shifting to the downside and we have more downside potential than upside potential, but still a little bit of uncertainty regarding no one knows what the fuck is going to be said. So for now, patiently wait. Be aware that if we had to go up and take down the market top, that's possible to me. Therefore, a stop loss in here doesn't seem to be an option at the moment. I suggest you be ready for potential volatility. My invalidation has been set to 28.71, which means we have to go there and handle candle closes, and I'll be out. If we do this, I simply get the hell out of Wall Street. It means that instead of reversing in here, we've got even more greedy bulls wanting to go to the historical highs. And I'll just get the hell out, admit that I was wrong, and I'll just shift my scenario. So now let's put that in a daily prospective context, because what we're trading right now is definitely daily and weekly biases for the days and weeks ahead. It's something, what we're playing in here is going to have rippling effects for the 2 to 3 or 4, not to say, let's say 3 to a year ahead, 3 months to a year ahead. All right, so what we're playing right now is definitely big deal. I'm going to use the word, even though I know it's probably not, I shouldn't use it, but fuck that. I mean, I'm not here to please some nasty analysts, so I'm going to say it. I just took what I think is the big short. It's still a little bit too early to say that it's confirmed, but what I will say, if it confirms, it's definitely the big short. So my job is not to wait for confirmation, it's to share my confidence in these trades and the context in which I'm trading them. I think if this trade validates, it's the big short. We're never ever going to go back in here again unless a few years from now. So unless many years from now. So probably it's going to take 4 to 5 years before we even get back to those prices. So I think this was the first alert. Only speculators took that market top, obviously me included. That was a goddamn job. That was my goddamn job. And obviously all these good jobs, okay? I'm not just going to brag myself saying I'm too good. I've been trading all those market tops. You know the reality. We've been trading together for months on a day-to-day basis. And I've been doing this for way longer than that, but for the French exclusively back then. So what we've been doing, remember how many times I've been selling before catching this top, all right? For those who remember, I've been taking a trade in here, stopped out in there, all right? I might have taken another, I remember I took another one in here, stopped as well. So 2 missed trade, tiny losses, but still failures, all right? So if you think I'm just a goddamn guy who just figures out the market top like he was a god, I'm not. I just speculate, and speculation comes out with errors. I took these trades in here, obviously, but I got stopped out in here because I reinforced there as well and got stopped, all right? So it means I tried, I profit took, I tried to trend trade, didn't work fine, I didn't bought that shit, I never sold in here, but I did sold at top. Then I missed this trade. Oh, this one, I remember it. I mean, the G20. God fucking damn it. I had an order ready to pick up right in here, like 28.22, and the market just reverses instantly, just pushes me out of the game. I was so pissed off. But still, I took a pretty nice fucking gain out of this entire down move. I didn't took it up to the bottom because I never anticipated that we'll do that kind of stuff. From what I remember, I profit took in here, and I even started to buy in here. So I bought this low with a failure, all right, because I started buying in here with a stop loss. So once again, I'm not magician. I try things and I risk manage, and that's the big difference among the guys who will just say I'm too good. I've been catching this stop, and I'll took this one. No, it always comes with errors. As precise as you could be, precision always comes with little mistakes, and it's not possible to do any different. Whoever says it's got the bottom without errors is just a damn liar, all right? And look at this one. Let's put out in perspective how many fucking times I got proven wrong in that thing. I tried to trend trade in here, didn't work out. I tried this one, and Powell talked me out instantly. No, I didn't take this one. I took this one, all right? And now this one, which means 3 mistakes to get to this eventually trade that is still not yet confirmed because the Fed can just fuck me up one more time. This is the last one. There's not gonna be a 5th trade in that attempt. If that attempt fails, I'm just out. And if it fails, let's put that in perspective. You need to have a mindset. You need to have a plan for most probable scenarios. To me, the most probable scenario is that we start deteriorating prices out of here and we follow this pitchfork. So that's what I think is the most probable. So following the pitchfork, which should lead us to some downgrading first before panic selling in the end. All right, so any pullback to this stuff, I'll sell it, all right? And I'll just push back to lower retracement level. I got my first target in here, which is 50% retracement of the overall stuff and 50% of the trend channel area. In here, I think that the bears should start lowering the positions to cash in to sell again every pullback, because I think what we're going to do in here is just slowly getting down. All right, first we go slow, we accelerate, then we pull back, and then this is where the nasty part shows up. Okay, this is what I think. First we're going to go there with a kind of a parabolic accelerating move, so slow at the beginning and accelerating in the end. Rapid pullback, just one more time. They're going to probably play the V-shaped structure kind of stuff to make you believe that the bulls have bought it out. But I think anyway, we're going to fail one more time in this pitchfork, and this is where the nasty things will show up. We'll catch up on the previous lows with lower highs, and this is where the bulls will capitulate. They will say, okay, this market is no longer bullish, and this is where the nasty game will start. Obviously, I don't want to start my game in here. I will start it in here after starting it in here, and I want to maximize the profit. Anyway, so if it works, not fine. If we keep on going straight line, which means if the Fed, instead of calming down the stupid market speculation, just ignites a new hope phase. And that's a possibility. We're going to go straight line to historical highs, probably dampen afterwards, because there's nothing to pay for. So what we can hope is normally we reach out to, and I'm going to give you that numbers right now. I already have that plan in place. So I'm just waiting for the market to give me the actual decision. And I'm waiting for that decision. Either the market will prove me right in the following days and weeks, and I'll be taking and heading toward a freaking nice gain that I've been working for 2 years, or the market will just invalidate the timing in one more time and tell me, no, Phil, it's not for now. Please keep it aside. All right, and we'll go extended corrective wave territory, which is a 127 to 138% fib extensions. It's not extension, it's retracement, but these are retracement ahead of 100%. All right. So to me, this is the area. My stop loss is on top of this area, obviously, with candle closers, which means if we go there with wicks and upper shadow candles, I don't give a shit. I'm not going to get out. All right. But if we do candle closers in here, I'm definitely out of that game. And in that perspective, I'll just let it go with that market. Buying? Absolutely not. Do I buy resistance? Since when? I never do that. So if we do this, I'm just going to buy my selling entries. I'm going to buy myself out. But that's it. The market will probably get to set itself on some kind of stupid euphoria or something like that. But normally, this is what it should look like. All right? Lowering volatility, and then, bam, problems ahead. I don't know when. I don't have a goddamn clue about the timing. All I can tell you is that normally we'll play with the fib fans. They will be risen, obviously, but normally we'll just destroy them one by one until something ugly shows up, black swan or whatever this is, but it's inevitable. The parabolic we're having means if we've got no reward, meaning no growth in prices, simply it means the bubble will collapse because there is too much credit, and credit needs growth. It needs rising market to pay for the debt. So anyway, if we stagnate, it's just not going to work anyway. So this is option one, which has failed because we've gone too crazy far last year and we're going to have to pay for that shit. Option number two, we don't fail. Fed is saving the market one more time, and that's a goddamn possibility. Oh shit, no this. And that's a goddamn possibility. Option number two, the Fed does its fucking job, which is not to force the market into speculative, dangerous speculation areas, but just calm it down as it's been stupidly speculating for the latest weeks. So I think normally the Fed should just stay the way they do, doing nothing more, but just changing a bit the vocabulary, switching to say that there is some speculative problems in the market as the macroeconomics are not following through, but we do have a market rebound. They need to assess the speculation in the statements today. Not saying anything more, just saying that if the economy deteriorates, they will be there to support the economy, but they need to say that economy and markets are behaving differently right now. They need to assess that there has been some speculation and that they see this. They need to say our job is to support economy, but not the market. All right? That's exactly it, because that's what the market thinks right now. They say, okay, then it's nothing bad is going to happen to the economy because the Fed will be there. I mean, how stupid this is. The Fed is going to be doing things only if the economy goes bad. Their job is not to anticipate the bad, nothing close to this. So the market is pricing all the best. The Fed thinks this is all the worst, so that we've got the best possible context for speculation. But this is not the Fed's job to just sparkle, and it's not sparkling, but it's more likely to fill a gas tank for speculation. It's not their job. Their job is to ensure financial stability. And by driving up speculation, they're definitely doing the opposite. So this is not the Fed's job to be accommodative right now, to be more accommodative at the current stage. They just need to say all over again the same speech, but they need to say that there is a speculative problem right now. The last time Powell has been talking was in here, and since then all of this just makes no sense. So they have to say it, that the market just took it wrong, that it is not like that. The Fed is not going to be there if nothing happens. The Fed is just going to be there if something happens. That's what they need to say. That's what I think they'll say. And obviously, if they say, no, we've got nothing more, we're waiting for information, and no, the market can take that as a granted open door, and they'll just try to push at high highs. If they do, I'm not going to follow that move. I'm just going to switch and shift my scenario in timing, waiting for this area in probably a few 2 or 3 quarters, and I'll definitely get to take that big short once again. I'm searching for that market top, which means I'm ready to have some problems in between, to make some mistakes. But all I care about is whenever this will come, I want to be ready for it. That's it. I'm going to stop in here for today. So Fed is obviously a big game changer today. Something has to change just a little bit regarding the previous statement. There needs to be the same substance, substantially the same at some point, let's say that this way, but they need to be a little bit a tiny change regarding, they need to send a signal to the speculators. That's all they have to do. To just say, okay, stop speculating stupidly, just pay for what is the reality and just go back to earth. That's what they will need to say. Not directly, and not using those words, obviously, using a banking word, which means we're hiding the informations. But it's need to be, that's what the market needs to take out of this. It's not going to be a speech, actually. If I'm, maybe I'm bullshitting. I don't even know if he's going to talk today. I think we're just going to have the minutes. No, yeah, we do have a press conference. I'm bullshitting. I'm going to have the minutes later. All right. So anyway, that's it for today. So like I said, cryptos, you just wait. Oh, and AUDNZD. Yes, we do have that. I bought yesterday, and I'm freaking happy with that. So AUDNZD has worked just as expected. I think we have a nice bullish reactivation, wave 2 kind of trading. We've had the wave 4 engulfing structure I was exactly waiting for. So bam, nice. I think AUDNZD, we're done with this. So I think we're ready for a big burst. All right, so that's exactly what I wanted. 4-hour context pullback, blue triangle. Oh shit, not like that. Did we have a signal? No, but we've got a nice bullish momentum right now, bullish cycle. So everything confirming that we could have another pullback, but anyway, I think this low is now a granted low. That's not gonna last. That's not gonna be lost. So I think now stop losses can be shortly raised below this level, which means available cash to me, and therefore first reinforcements. Breakout trades may be coming later, as we do have possibly. This dip is not yet worked out. So what it means is that if we do break this up, that's the breakout trade, because we'll break it with higher lows. If we go for another drop, which is totally possible, then no worries. I'll still have that trade. My stop loss must remain there. And my stop loss is not yet there. It's still there, but it will rise up here when we'll do the breakout trade. And I still tend to believe it's going to happen. Which means my goddamn big friend NZD GPY is probably going to trigger a pretty nasty trade sooner or later, rejecting that low volume area in here, and I still stand for this. Anytime we get the hell out of here, it's not going to be pretty. This fucking trade took a shit ton of time to consolidate and digest this. I mean, look at that. Look how long it takes. All right, from top to bottom, it took us more than 2.6 times to consolidate. All right, so that's enormous. That's really fucking enormous. It's nearly even 3 times. All right, so it's almost 3 times the impulsive wave. Normally we do the opposite. Consolidations are shorter than the impulsive waves, but in here the impulse waves have been so brutal that we needed 3 times the impulse in timing length to consolidate that shit. That's rare, but it happened in here. Reason why, once again, I got freaking too aggressive by starting selling in here, but any fucking way, I still tend to believe this thing will make lower lows, and I'm still bearish in terms of projection. That's basically it. I think I said it all. So regarding dollar, obviously we got to talk about the dollar. So dollar is obviously at a big switch, big game changing. I don't know once again what the damn Fed will say. All I can tell is that it's not even just about what the Fed will say. It's more about how the market will have a perception of what's been said. That is important. We're definitely at a switch. Which means there could also be a third option, which is indecision, in which we got volatility and then contraction, and the market will make a stance and take a decision later on with additional information aside from the Fed. They could be waiting for additional data, CPI, the NFP, or anything like that, which means don't forget that there is also the possibility for nothing to happen today. I don't nearly think it is, and I think anyway, if it's not today, a decision will be made sooner or later. So now let's go DXY and kind of making a long-term projection. What are the direction in a daily chart perspective? We've got two choices. My stop losses are there, and I think we're mature enough to get the hell out. I think we've got a double top structure that will give us to double it down, which means I think this is where we're going to trade, because that's the double down structure of this range, okay? So you take the double top, you double it down, and normally this is the area we should get to trade into, all right? So I forecast this double top to be broken down. I still don't yet know, but I think anytime we reach out to the bottom, it's probably going to weaken until we get the breakdown. That's what I think is going to happen. I don't know for sure. All I can tell is that normally this is what I favor. Going in there, hesitation before breaking down, getting right into context. If this happens, I'm going to take a freaking nice gain. I will have done my job, pure and simply, no more than that. I'm not bragging myself. I just risked something and managed my risk to the gain. It's still, there's the other option, which means we don't go according to my plan and the market just proves me wrong one more time and just tells me just one thing: Phil, the timing is not now. Fuck you a little bit and then we'll eventually prove you right, which is exactly what the market does to speculators. Either they prove me right because they can't do any different, or they will just prove me wrong in timing and just say, okay, it's not right now. We'll do it, but later. How is this going to happen, though? If that's the case, then we're going to break this very low volume area, which means it's going to take a shit ton of time. So I'm definitely going to get the hell out, which means I'm going to stop loss trigger if we go there and wait for new informations. There's going to be an interesting cluster to watch out for when we try to overcome the context, all right? Which means if we go upside, we'll probably fuck up this context, okay? We'll try fuck this up. So anytime we'll try to overcome the context, I'll have a quick and short look at the informations I'll have, the signals I could eventually trade, but if nothing happens, then we'll just let it go, all right? Normally, we're going to target further retracements. It's simple as that. So if we go up, we're simply going to target the weekly retracements. All right, so it means we break this one. Probably this area is the area I will be trading into the weekly context, but with weekly signals instead. All right, so if daily doesn't work out, I think daily we've got pretty tradable signal. If it doesn't trigger, after all this freaking shit ton amount of work, I'll wait for the weekly area, which is higher, with a Fibonacci at 100. I don't nearly think we've got what it needs to go there, as we have lower lows. I don't even think that we have the potential to retrace up to those resistances, but if we do, this is where I'll trade. And I'll trigger my stop losses in between. All right? Simple as that. Always have a plan for God every fucking possibility. I know there are multiple options. There are way more options than that, all right? Let's figure this out. We're going to terminate this show with this. What is speculative trading? Is it forecasting the future? No, it's just assessing the major probabilities, which means consider this, all right, as the set of probabilities, all right? Let's say this is option number A. All right, I assess that option number A has approximately 50% chances to be put at place. All right, this is obviously speculation that brings me this throughout the additional informations I have. Additioning those informations will give me a probability of success. So let's say 50% or option A, approximately 50% chances to play. So 1 out of 2, all right? Now let's say we've got option B, okay, which is the second option but least favorable, all right? There's generally three choices in the market. Doing what you think the market is going to do the most probably, so moving up, moving down. The opposite direction, so if you say it's going to be moving up, there's still a possibility it's going to keep on moving down. And third option is generally not moving, all right? But this is not just like that, okay? Because basically, you really need to figure this out, all right? So option A, option B. We're not even going to call them option B. So it's falling, all right? So let's say we're in a buying perspective, okay? So what you're expecting is the price to rise, okay? So the options for the price, the odds for the price to rise are 50%. The possibilities for the prices to fall are 25%. The to be standing will be 10%. All right? So you assess that there is a very low probability for the market to stay in that current price area. All right? But still, where is the remaining 50 fucking %? What is this? How do you assess this? Because this is really important to understand in a trading strategy. The rest is just what fucks up whoever is too stupid enough to think they control the market. This is chaos. This is the rest. This is anything different than what is logic. And chaos is what fucks up every trader who takes too much risk when they trade. Chaos shows up pretty fucking rarely, but when, still, it has options to show up. And when it shows up, it just means you haven't been taking too much risk. That's simple as that. All right? You take too much risk and chaos will take you over, which means even if the price will rise, they will first fall a bit further enough to fuck up your stop losses, which means the finality, okay? This is risk management, but the finality is always what I teach you guys not to focus up onto, but it is it. At the end, either it's right or wrong, but that's not like that. People will say right or wrong. What I call is profit or loss. That's the inevitable end of a trade. Either you take a profit or a loss. And that's what comes out of the odd assessment you'll do in here. And if you forget about chaos or underestimate it, this is where you're going to get much more losses than the profits, even though you were right in your forecast. But you didn't let enough room for chaos to work with. This is stop loss. This is why we use stop loss, and this is why you put your stop loss not close to your entry price. You leave some room for the price to work out chaos. All right? And you really need to understand that. If you don't embrace chaos into trading, you're just not trading. You're guessing and betting, which means gambling and nothing close to trading. All right? So that was kind of a 2 days tips that you really need to understand. When I tell you market is more like chaos, then if you put out chaos out of trading and you try to make things rational, you just got it all wrong. Really, really, really wrong. And this is what's going to bring you to being more wrong than right, and having more losses than profits. It's simple as that. All right? So embrace chaos and let enough room for chaos to work. I think in here, I've been letting almost more than enough room for the chaos to build itself in this area. I think I got an average short price, which is not that bad. And I think I'm now ready for the thing to play its game and start freaking falling like I forecasted it will do. Simple as that. Now, future will tell me if I'm going to have a loss or a profit out of this speculative scenario. If this one fails, the next time I trade is probably going to be out of 100. And being proven wrong and taking a loss doesn't even mean I'm going to stop trading this scenario. I'm just saying timing is wrong, so I'm going to wait for the next speculative timing. And simple as that. All right. That being said, I'm going to wish you guys a pleasant day, and we'll catch up on later.